Investing News Network, and here today with me is frequent guest Louis James. Thanks so much for joining me.
Glad to be back.
Yes, wonderful to have you. I wanted to start by talking about 2017 since we last spoke in October. What were the main themes that you saw last year?
Sure. Well, as everybody knows, 2017 was kind of a challenging year. But it was interesting in that, in terms of the commodities that most resource investors are looking into or focus on the most, it was actually a pretty good year. Some of the commodities, like zinc, did spectacularly well. And even lowly uranium came back and gave us a little bit of joy at the end there. But not the equities. You look at the stocks and it's like we're back in the bear market or something. I see that as an opportunity, actually, because whenever you have a divergence between price and value, there's opportunity there, and that can be on the upside or the downside. But we had the value in these companies that have anything going up, and many times the valuation, the price, not going up. And in my view, that reflects an opportunity. Of course, tries the patience and so on, but it's one of those stage-setting moments where you can build quality positions in good companies.
Okay. Where are we at so far for gold in 2018? We had a sell-off, stock market sell-off in February that didn't do much. We have a new Fed chair. What are factors you're looking at?
Yeah. Well, the sort of driver's seat for gold this year, and actually late last year, it's been going for some time, is the old gold-dollar inverse relationship. There's a lot more to these markets than that, but there are times when gold tracks very strongly inversely to the dollar, and sometimes it moves with the dollar in the flight to safety times. Now it's good times moving inversely. That's been very strong, and so of course if the new Fed chair says things that sound bullish for the dollar, then maybe that's bearish for gold. But it's important to remember that the dollar doesn't just go up in a vacuum by itself. It goes up or down compared to other currencies. And with Europe apparently on the mend and Asia coming in stronger in many ways than expected, the dollar has been weaker in foreign exchange over the time that we're talking about. So you could see the Fed say things that might seem to be bullish for the dollar and bearish for gold, but not have it really knock the stuffing out of gold, because at the same time, if the Eurozone is doing better and the dollar seems to be going down, then gold will go up. Crystal ball, who knows, who knows. But what I will say is that I can't imagine the world en masse saying, you know what, we don't need no stinking gold anymore. Let's just dump all this yellow stuff. We don't need it. It's certainly not in India and China. So I'm not worried about gold cratering, going down in any significant way. If we trade sideways all year, sideways is another word for stability, and that's a good thing. If you're a miner and you can count on your prices, how wonderful is that? You know where to set your costs. So, a sideways year at $1,300 plus gold, that's not a bad thing. 10 years ago we were hoping for $1,000 gold.
That's true.
Right? And now here we are at $1,300. If it's stable at that rate, well, the good companies will make money, the good projects will get built.
Okay, what about gold stocks in 2018? You mentioned last year was not great. Is now a good time to invest in gold stocks, and which kinds of stocks?
Yeah, so the general answer is yes. Yeah. Right? As I was saying, when price and value diverges, I think value is not going away, therefore price has to catch up. That makes this a good time. My favorite sweet spot in the gold stocks is the pre-production stories, what we call it, the golden runway, when people ramp up to first pour at their new mine that they've just built. The statistics haven't changed much since we last talked about this. There's a couple more cases. One was great, one was so-so. The average is about the same. It's still about a double between the construction decision and pouring that first bar of gold. Takes about 2 years, plus or minus. It's about a double, and the odds are still about 95% that you'll succeed. Yeah. So those are great odds on great gains. So that's definitely one of my foci.
And just for those who don't know, that's something you've put a lot of research into in the past.
Yeah, we back tested that. We've done, we've gone through paper, old archives of industry journals and online, and we've used Bloomberg and all these terminals to build that database out. We've got 30, 40 years of data. It's a very, very strong relationship.
Okay. Aside from gold, what other commodities are you watching this year? Energy, metals, I remember you were warming up to.
Right, yes. Well, the commodities tend to move as a cycle as a whole. Commodity super cycle, we like to call it. And that remains strong, that relationship remains strong, and it remains curving upwards. So we're commodities bulls in general, and that's great for all of them. But in particular right now, there's a very, very powerful trend that I think trumps almost everything else. No play on words deliberately there. Then that's the new energy minerals, as we like to call them. The push into what was once called alternative energy, but really now is becoming the new mainstream. And I really believe that in not too distant future, petroleum will be used for like Vaseline and other specialty uses. We're not going to burn it for fuel anymore. That would be an alternative energy. So the minerals that go into this are, some of them are rare, some of them are not, all of them are up. And governments all around the world are pushing for this. There are bans going into place, there are incentives, tax incentives. And I'm not a pro-government kind of person. I'd much rather see the market do this, but you can't ignore the fact that that's happening. But even better than that is the fact that this is starting to take off. Like, people want these products. It's not just the government's pushing to make everybody drive golf carts. It's Tesla making a super fast roadster, right, that everybody wants. And so people now want these products. And this is one of the trends of the century, perhaps. I mean, this is a trend that's going to last decades. There are resources that are going to be necessary that we don't have now, and it's easy to identify. So it's something that I think, market volatility aside, people can find the right spaces, find the right sweet spots again, invest accordingly, and they should come out very, very well.
Okay. Final question. We're here at PDAC, and I believe you're doing something different this year. Can you tell me about what is coming up next for you?
Yes, I have to say that I am starting my own company now. It's going to be called Louis James. Louis James is becoming a brand. That's okay. I've learned a lot working with Doug Casey over the years, almost 14 years. Rick Rule, all these people that I've worked with, many of them here, my mentors. The Casey organization has been fantastic for me. They've taught me so much. I hope we'll be fellow travelers in the future. But I've got ideas, and I've got things that I'm excited about that I can do in the context of my own business, I think, more effectively. And one of the things I'm looking forward to is, under my own business, I'll be able to correspond with my readers again, so I can communicate with all the people out there I haven't been able to be in touch with for a while. So I'm very excited to be announcing the start of a new company. There's a URL you can go to, louisjamesinc.com. Very simple, L-O-U-I-S, jamesinc.com. And sign up. We are not ready. I'm still with Casey for the moment, but I'm here now, so I want to let people know this is coming. And sign up to find out more. It should be fun.
Okay, well, great. Thank you so much for joining me today. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Louis James.